Alright, so in my last video you saw that my strategy works with all different kind of account sizes. But let's get into some more basics because this is a 7 video lesson series. Video lesson number 7 is going to be just something that's going to blow your mind away, but first we have to get some basics. So what does it mean to go long? Going long is basically where you think a stock is going to go higher. It's, you think the company has a good product, you think that there's going to be more people who want to buy the stock later, you think that it's going up, so you're invested. And it feels good to be invested. Trust me, I made my first million buying stocks on the way up. But there's other ways to invest. It's not just only about upside because you limit yourself. Just like in tennis, you have a forehand and a backhand. So I actually made my second million going short. And so now I go both ways. And going short means, have you ever heard of the saying, don't sell yourself short? It's where you underestimate and you think that, a company is going to go bankrupt or it's going to fail. I wouldn't encourage you to sell yourself short, but I would highly encourage you to sell some of these companies short. Because a lot of these stocks that I trade, especially stocks under $5 and under $1, they are the worst of the worst, okay? There's a reason why their stocks are so low. But still you have these people that think they're lotto tickets. And really, if you look at them and you analyze them the way that I teach you to, dig into them and really understand what the company is, whether it's going to go up or down, you're going to realize that even a stock at $1 is usually worthless. So I know it sounds crazy to go short stocks trading at $1 or $2 or $5, but these stocks are worth zero. Okay? Think about like if you're going to a sushi restaurant and they have 50% off sushi and you look at it and it's kind of like a few different colors and you're like, ugh, that's not worth 50% off. That sushi is worthless. Okay? And I try not to get the 50% off sushi. I look at it and I'm like, no, get the fresh sushi because bad sushi is dangerous. And if you go long, a bad company, it's dangerous because these stocks can be worthless. All you need to know is that you can go both ways. No longer do you need to say, oh, the economy has to be great. Sometimes the economy isn't so great, and you can go short. So what is a breakout? We're getting a little more into a technical term, and this is just when a stock hits a new high. And it's a very important kind of event where, lots of traders like buying momentum. They like seeing stocks that are hitting new highs because they're like, oh, what's this? This company is breaking out. It's something new. They have a new product. And it gets everybody really riled up. And it's good to buy breakouts. I know you want to buy low and then sell high, but in my experience, it's good to buy stocks when they're hitting highs because they tend to make more new highs. And statistics, if you look through the history of the stock market, it proves it. So here's an example of a breakout that I bought. I drew a little blue line here. This is ticker symbol LEXG. And I bought this at $1.38 right here. And within a month, it went from $1 to over $10. I didn't hold the whole way, but I recognized the breakout. And it was because there was a whole marketing campaign behind the stock, and the stock was hitting new highs. And as you can see, this went up 10 times inside of a month. It also came down when the hype died down, but I was much more interested in being early and simply buying the breakout. And I want to show you a few examples because I made money on the breakout and on the way down. We'll get to short selling in a second, but let me just show you some trades. So this was my, first buy. I bought it at $1.39, and you can see right here I made $900 in a day. And, obviously I could have held till 10 a month later. I wish somebody had knocked me out, and I would have made $150,000. But that's the beauty. Like, I've made a few $1,000,000, but I haven't timed anything perfectly. I'm not a perfect trader, and I don't want you to be a perfect trader. I just want you to take your money, just like I've taken my money. Here's another trade. This was actually from one of my students, and he made $3,700 on the same stock. He held for nearly a week, and he made $3,700. That's awesome, okay? The stock was breaking out, and it kept going, so he banked. This guy said, look at this, first 1K gain ever. He made $1,300. This was later in the pattern. He bought at 168 and he sold at 218. So you don't have to buy all at once. This stock kept going. And remember, this stock went to over 10. So him making $1,300 and selling at 2, He vastly underestimated it. We all vastly underestimated it. But this is the beauty of penny stocks. These stocks can go up 10 times. When you have Google and Intel and GE and Bank of America, they're not going to go up 10 times because they're already big companies. This is the beauty of penny stocks. And here's Bill Lynn. You know, he's shorting it. So he's betting against it when you sell short. And this was on the way down. He bet against it at 7 because he thought that this stock was overvalued. And he covered at 3, meaning he sold short and then he bought to cover. And I'll go into this in more detail. You know, I know it's confusing to sell short, to bet against a stock, but just know for right now that you can profit when a stock goes down. If you think that a company is not going to have a good product, or you think it's going up too much, like when a stock goes from 1 to 10 in a month, you can bet against it. And Bill Lynn, look at this. He bet against it and he made nearly 50% in a day. Beauty. And here's just another student. I have thousands of students. These are just a few examples, but I wanted to just show you of what my students are making. You know, this guy also shorted the stock on the way down. He bet against it at $1.70 and he covered at 86 cents. So he made another 50% and he made $7,000. We're talking $7,000 in just a few days, making 50%. And that's awesome. Okay? This is the benefit of being able to, you know, buy on the way up and short sell on the way down. And it's pretty simple with penny stocks because they're, you know, have you heard of the term pump and dump? You know, they don't really have many bounces. It's just like, okay, this company is great, it's not so great. And in the next few videos, I'll get into details of how you can understand some signals of what makes a great company or what makes a stock go higher versus lower. It's not very choppy like, you know, with Google and Intel and all these real companies, these big companies. They have so many products. You know, people are changing their story all the time. You have CNBC playing guessing games about breaking news. We don't have to play guessing games. Here's a breakout. Just another example of a breakout. I drew 2 blue lines. You can see here, this is PZZI, and the stock is pretty much just trending between 2 and 3, and then it breaks out to a new high at 3.5. They were introducing a new concept, their Pi 5 subsidiary. It was like making pizzas, kind of like a Subway sandwich shop, and instead of making subs, you make your own personal pizza, and it's cooked for you within 5 minutes, and, you know, it's a pretty cool idea, and they're just starting to franchise. So the stock broke out as people got excited about this story, and it broke over previous highs at 350, and then it kind of topped out at 5, came back down to 4, and then it broke out over 5, and it actually went much higher too. But these breakouts are great buying opportunities, and I nailed it the second time. I missed it the first time because I was like, Pizza Inn, you know, they usually have crappy pizza, but their Pi 5 subsidiary makes the company an exciting story. So here's one of my students, Alexander Vo. I call him Captain Puker because we met up in New York and he could not hold his liquor. So if you hear me say Captain Puker in a few videos, don't mind me. I just, you know, we got along. I didn't end up puking, but we had a good time drinking. And so he bought the breakout. Remember, the breakout in that chart was 5. He bought it at 5.20 and he sold it at 6. So nearly a 15% return in just a few days, made $3,000. Awesome to buy the breakout. This is my trade. I bought it at 5.30. I held the same kind of 2 weeks and I sold it at 6. So I made $1,400. And this is how I make my money. You know, when I say I make my millions, people think, oh, it's all like on one stock or something. No, I just look for breakouts and breakdowns. I go long and I go short, and I make a few $1,000s each time. You can look at all my trades on Profitly. My average trade is $2,400 in profits, but it adds up because I'm winning the majority of the time because this stuff is predictable. Here's another, you know, one of my students. He bought it at 5.30 and he sold it at 5.90. You know, made 12%. You have to understand what 12% means. You know, there's a lot of mutual funds that would love to make 12% in a year. And we're making this in a few days just because of the breakout, because of the story, and a few other indicators, which, you know, again, I'll get into more details. But right now, I just want to introduce the basics. And here is another trade, an earlier trade where I bought at 5.25 and sold at 6.18. You know, I'm in and out. I don't hold, you know, stocks forever just because I like taking profits. You know, $1,300 in a few days. I love it. So what is a breakdown? It's the opposite of a breakout. A breakout is when a stock is hitting new highs. A breakdown is when a stock is hitting new lows. And when a stock is hitting new lows, it usually makes more lows because there's some bad news. And, bad news, not everybody understands the bad news all at once. Again, because you have CNBC, which is just as bad as penny stock promoters, in my opinion, because they're guessing all the time and they're making you think that the stock market is very complex because they're betting on very complex issues and companies. I don't like that. I like simple. One guy emailed me the other day. He's like, Tim, you made millions of dollars and, they're on the most gimme chart patterns in the world. They're so easy. Let me know when you want to play difficult chart patterns. And I was just laughing to myself because I was like, you know what? He's right. Like I trade easy patterns where it's like clearly a breakout. It's clearly a breakdown. And, one of my high school teachers taught me the phrase KISS, keep it simple, stupid. And in my experience, simple works. So I want to teach you this framework so that you're not confused and you kind of, take the guessing out of it. So here's a breakdown. This is Ren. They're often known as the Chinese Facebook. And you can see here, this is, each one of these kind of candles represents one day. So every day it's coming down, bounces off 12, comes down to 12, bounces to 13, comes to 12, back to 13. I drew this blue line. You can see there's a clear breakdown right here at 12. That is a sign that the stock could go much lower. It was clear as day. So I want to short the stock. I want to bet that it's going to go lower. Unfortunately, the day that it broke down, I was moving a couch. And I had this in my watch list, but I was moving. Sometimes life gets in the way of a trade. The good news is because I had it in my watch list, my students were prepared. This is why I send out a daily watch list every morning before the market opens to prepare everybody. This is Elkwood. He made $1,700 in basically a day, betting against the stock at $11.88 and covering when the stock went a little bit lower. Here is Clever Pete. He shorted it at $12.18 and covered or bought to cover at $10.71. He made 12% in basically 2 days, $1,400. Good profit. But you don't necessarily just have to play a breakdown one way. Because I was moving a couch, I missed the breakdown. But when I got in, I saw that the stock had dropped from 12 down to the 10s. That was too quick in my opinion. So I actually bought to the dip because I understand these chart patterns well enough because I've been trading for so long. I bought because I thought it was down too much. And guess what? In a few hours, I made $600. Not huge money, but it paid for the movers of the couch and me. Here's MILV. Here's a chart. I just want to show you what another breakdown. This stock is trending between 12 and 13 cents. And oh yes, sometimes I short stocks that are this cheap too. I don't necessarily have to short a $10 stock or a $50 stock. Sometimes a stock is trading at 12 cents and I still think it's worthless. And if you look at a chart of MILV, you'll see this stock is worthless and it's trading at less than a penny. But this was when it broke down and right here. And I was shorting, right here at 13 cents because I was expecting the breakdown. This is just a 2-day chart. All in 1 hour, it dropped from 12 cents to 8 cents. It doesn't seem like a lot. It's only 4 cents a share, but that's a big percentage drop, and it was predictable due to the breakdown. Here is my buddy, the honest crook. He made $1,000 in 2 days. Beautiful. Betting against the breakdown. Here's me. I made $1,900. I shorted at 13, covered at 9 cents. I made 30% in 2 days. Again, remember that mutual funds love to make 10, 20% per year. If you're a mutual fund and you make 30% per year, or if you're an investor and you make 30% per year, you're doing pretty good. People are like, wow, what's your secret? I make this in a few days because penny stocks are volatile and they are predictable. And that is the beauty of this. So you can go long, you can go short, just focus when a stock makes new highs and new lows. I don't care about the vast majority of stocks. I weed out those stocks by simply focusing on breakouts and breakdowns every day. So stay tuned for my next video. We're going to get more detailed into my strategy. We're going to keep going. Stick around. I promise you this is going to be amazing. You see the profits. It's going to keep happening. I hope you enjoy it. Thanks.